Hi, welcome to Credit Recovery, where you learn everything about credit. I am a certified mortgage underwriter. I am a loan underwriter, and I was previously a certified credit counselor. Clicked on this video today because you just learned that everything about getting to an 800 credit score is a lie. That's kind of true. Let me explain. Let me explain. Okay, so when you're giving out information, you have to know the whole information in order to understand the information. So when you get parts of information or information like in a layer, so so everything that you already know so far is like the first layer. Then you have a second layer that is a person like me. I am a loan underwriter. My job is to approve and decline someone's loan based off their credit, their income, their assets such as cash in the bank, stocks and bonds, 401ks, any liquid cash or any liquid assets, and then the collateral like a house, a car, a boat, a motorcycle, etc. So I am like the second layer, and then you have the third layer, which is to me is the credit bureaus. But with you now on my channel, you're getting the second layer of the information, which now is going to give you that step closer to getting the full picture and understanding when it comes to building for an 800 credit score. So what you're going to go ahead and get today is we're going to go ahead and do a couple reactions to people giving credit advice of how to get to 800 or pretty much in the high 700s and how to get approved for a loan, and you're gonna learn that from moi. So be excited, because I know I'm excited because I get to give you guys more information of what you don't know. So let's go ahead and hop into this video. All right.
Hey guys, in this video, I'm going to show you how to get an 800 credit score in 30 days. We'll be going over 6 tactics that you can start implementing today, which are going to have a huge impact on raising your credit score all the way to 800. Now, why would you want an 800 credit score? Well, for everything. Whether or not you're getting a car loan, you're getting a mortgage on a house, trying to get the lowest interest rate possible, or even just getting approved for a rental, these everyday things are all impacted by your credit score. It is just a number, but it is a number that is important as So the first method that we're going to be talking about, which will really help you get to that 800 score, is becoming an authorized user on someone else's credit card. This is an effective but lesser known strategy for raising your credit score very fast. For example, I've seen jumps from 50 to 100 points immediately from doing this. So here's what it is. You're basically joining someone else's credit card. The bank will send the primary account holder a credit card with your name on it. And if that person does decide to give it to you, then you are free to use it however you want. However, the interesting thing is that the primary card holder, the person who's authorizing you to be a user on their account, is fully responsible for paying off the card. And since they are associating that account with you, it can really help you out by associating their long credit history with you. Now, to do this, you need to find someone that you trust and someone that also trusts you as well. They need to have great credit because, you are piggybacking off their credit history. But of course, if they do give you the card, you can spend on that card however you want, and that can definitely be dangerous for the other person. Optimally, it's going to be like a parent or a relative or someone that you trust who has a long credit history with that account. Now, once that primary account holder gets that credit card in the mail, they can choose whether or not they want to actually give you the card. Either way, it has the same effect on your credit score. So yeah, they can just hide that credit card, put it in a drawer, and not let you use it. But you still will reap the benefits of being associated with that account. If you are young, I really encourage you to do this, because otherwise, when you are ready to open up your own credit card, you might not have enough credit to do so. The thing is that you just have to be really careful. You need to make sure that this person is trustworthy and that they have a great credit score themselves. Because if they don't pay off this credit card, then you are screwed as well. Now, even if you are seeing an increase in your score, which you will if you become an authorized user on someone's card, you still might not get approved for certain loans. If you're trying to get, for example, a mortgage or a car loan or any loan that's rather big, they're probably going to dive deep into your credit history, into your credit report, and see that you're just an authorized user on someone's account. And that might not be enough to get fully approved for that loan just because you have a high credit score. They want to know that you are responsible for that high credit score. But you guys still definitely do this. It's a great way to instantly boost your credit score and really set up that solid foundation that you can start building off of. All right, the second thing that you guys
All right, authorized user. He pretty much said it there himself. Like, it's not going to help you to get you approved for a house and a car, which is the reason why I don't know why he started off with this as the first one, but he did. So essentially, what an authorized user is going to do is it's just going to inflate your score. So if you have like maybe a 500 or let's just say 600 credit score, maybe you'll bump it up to a 650 credit score. So that's essentially what's going to do. When we look at your application for credit and we see an authorized user, we don't really care. Like it means nothing. We know that you don't pay for those types of those credit accounts. So there's no point. So if you don't have a lot of credit and you're just like authorized user and a whole bunch of accounts, stop. Build some credit and on your own. And like you said, this is not going to help you get approved for a loan. You need more, which is why I don't understand why he didn't start off with getting a secured credit card, or maybe if you own a car free and clear, you can get a secured loan against the car and take some cash out, and then repay back the loan with the money that they gave you, like because you want to already start establishing your own credit from day one. Which again, I don't know who he's talking to. So let's say if it is someone that's new, you want to already start establishing your own credit from day one, and then you can use an authorized user to help you inflate your score to get you there. But if you are somebody that already has credit, maybe becoming an authorized user may not help, because again, there's so many different things that affect your credit score, that the reason why you're not maybe getting up to a 800 credit score. Maybe you don't have a good pay history with paying your bills on time. Maybe you have a lot of debt and your credit utilization is high, and you have a lot of unsecured debt and installment debt. Maybe you're still new to credit, which credit history counts as the third strongest factor for Experian, at least. For TransUnion Equifax, that's something different, but that also accounts for your credit. So there's a lot that goes in order to get you to an 800 score to start off as a authorized user. It's definitely not the way. It's gonna help, but it's not really gonna help a lot. And I'll put a video either here or here, so you can see. I made a video about a credit report that I was able to find online of a credit report that we use to look at your application, so you can see the habits of someone that has an 800 credit score, and you will not see an authorized user. A lot of credit reports I've seen that people that have an 800 credit score don't really have an authorized user. So like this isn't really like a strong weight of like determining, oh yeah, you're gonna get to an 800 credit score. So yeah, that's I don't know why he said that, but well, let's go and continue.
Have to do is dispute any errors that are on your credit report. If you spot an error on your credit report, you basically have to report that. Why? Because it could lead to a huge boost in your credit score. I've seen sources say that about 25% of people have some type of error on their credit report that they are not aware of. This means that about a quarter of you guys have a credit score that is lower than it should be, just based on an error from the credit bureaus. This is what you have to do. You have to go to annualcreditreport.com and request your free credit report. This is the official site, you guys. Don't go to any other sites claiming to give you a credit report. And right now during the pandemic, they're actually giving away free weekly reports for all 3 credit bureaus. That's really amazing, you guys, because normally you only get 1 free report from each of these credit bureaus once per year. So what you guys should do is get your report for free and then check to see if there are any errors. This could be accounts that are listed as in collections, even though they're not. Misspelled names, wrong social security numbers, anything that is incorrect, you guys need to correct as soon as possible. And to dispute it, you can do it online, you can do it through the mail, or you can also call them as well. Online is probably the easiest, but each bureau is going to have their own system for disputes. I'll link them below, and all you guys have to do is follow that guide and wait for that correction to be approved. If you successfully remove a late payment or an account that should not have been in collections, I guarantee you that your score is going to go up dramatically. So this is one of those things that everyone tells you have to do it. You have to dispute anything you see on your credit report that is false. It also does not take much time and you can do it literally right now. So definitely recommend that. Okay, the third method for
Okay. The chances are of you having an error is true based off what he said, how common it is. I really don't see that really a lot, and I've viewed thousands and thousands of credit reports in my lifetime. So the reason why I say collections won't really work is, well, it's going to work, is going to increase your score, but it's not going to dramatically increase your score. Only because you got something removed doesn't mean that it's gonna increase it by 100 points. Like on Credit Karma, if you go onto Credit Karma and you find an error and you dispute it, it tells you that you can only get like around like 20 something points just to go ahead and for disputing it. And if you win it, or if you pay off the collection, it's gonna end up being like 25 or 20 points for paying it off. So it's like, that's not, it's gonna help, but it's not gonna be like a huge deciding factors, because the common people that end up having errors are people that are that have the same names. So like a junior, a senior, same names. What I mean is maybe they got confused with somebody else that has their same name. I've actually seen that happen. And those are like just the common ways that normally if you have a collection, like at least 8 out of 10 times is going to be due to it being a valid collection. So it'll help, but it's not going to give you the increase that you think it is going to give it to you. So let's go ahead and continue.
Getting an 800 credit score is to lower your credit utilization ratio. This actually accounts for 30% of how your score is calculated, and it's a powerful tool for raising your credit score in the short term. So first of all, what is your credit utilization ratio? It is the percentage of the total credit limit that you have used. So let's say you have one credit card and your credit limit on that card, the max you can spend at one time is $5,000. Now, if you buy something that's $1,000, that means you have used 20% of your credit limit. This means that your credit utilization is at 20%, and it's gonna stay at that 20% until you pay off the card. Now, the goal here is to keep your credit utilization ratio quite low. The credit bureaus really don't like it when they see you using too much of your credit limit, because that shows that you are more risky. Now, most sources say that you should keep your credit utilization below 30%, but I tend to keep mine between 2 and 10%. If it's too low, like 1%, that shows them that you just don't use your credit. And if it's too high, then that just automatically flags it as risky behavior. Now, what happens if your credit limit is too low and as a result, your credit utilization ratio is just always super high? Well, besides just spending less money, there are a few specific things that you guys can do. The first thing you guys can do is to just sign up for more credit cards. Each credit card that you add to your arsenal of credit cards is going to increase your overall credit limit. For example, one credit card could have a credit limit of, let's say, $5,000. And if you get another credit card, that could come with another credit limit of, let's say, $3,000. So instantly your overall credit limit went from $5,000 all the way to $8,000 just by signing up for that second credit card. The second thing you can do is to pay off your credit cards faster. So let's say with that same credit card that has that $5,000 credit limit, you use that to buy a MacBook for, let's say, $2,000. That means, bam, your credit utilization ratio is already at 40%. What you want to do right then, since it's above 30%, is to pay it off as soon as you can. Once you get over 30% credit utilization, make sure to pay off that card right away. And the third thing you can do is actually call your credit card company and ask them to increase that credit limit. This won't always work, but it really doesn't hurt to try. And yeah, I've called them and asked them to increase the credit limit, and they've said yes. So I definitely know that it is possible for some cases. There is a balance between never using your credit card and just using it too much. You want to show them that you use your credit card, but you don't want to show them that you use your credit card to make these really expensive purchases that you can't afford based on your credit limit. This has a huge effect on your credit score, like I said, 30%, and it's just going to get you one step closer to 800. All right, the fourth thing that you can do is to stop applying for credit.
All right, let's break down what he said. Okay, so what he said is half right. So what I mean about that is, so when you are when your credit utilization is high, it's actually just not your credit utilization that is high. It is also your it is just the amounts that you owed, because what he's talking about is from Experian, and how they calculate it. So let's take a look here. So you have right here FICO, which is um, which 30% accounts to the amounts you owe. So if 30% accounts for the amount you owe, that means then that is your credit cards, your unsecured loans, your installment loans. So that's all bunched up together. By paying down your credit utilization, that will help, but it's you also have to pay down your actual debt, which is what he doesn't explain. And then what he says is if you have a high credit utilization, just pay down the credit card. For most people, that's not going to be possible, because like the median income in the United States is 44,000 from what I learned. And if that's the medium income, like even somebody that makes $72,000 here in the state that I live, after taxes, you're taking about $48,000 a year, which is a little bit pretty much more above the median after taxes. But essentially, if they're already paying their mortgage or rent, which is the biggest chunk of their money, if they're single or potentially married, then and they have cars, they have credit card debts, you can't pay it all fast, because again, this video is called how to get your credit score to 830 days. And if you only make $2,000 to $3,000 per month roughly, and that doesn't really leave a lot of room. Like you may find like an extra 500, but let's say if you have $10,000 in debt, by just throwing $500 is not really going to lower your credit utilization. So for that advice, it doesn't work. And then now speaking at it from an underwriter perspective. Okay, so when I've reviewed people for a personal line of credit or unsecured debt, how much debt already um, out there they have will affect you from getting approved. Granted, he did say that, hey, just try just to try, which I don't blame him. I'm not gonna knock it too hard, but the thing is, why risk getting a credit inquiry, which I think he was about to just get into? Like, why risk getting a credit inquiry if you know you're not getting to get approved? Once you start getting over 30%, like for me, once I see people getting to like 60% of their credit utilization, between like that 50 to 60%, it's bad, because I'm like, okay, so you're not able to pay down your debt. Because I'm the type of person who's like, I believe if you have a credit card and you want to use it, that is fine, but there is a certain limit to your credit utilization. Once you start going over 50%, like to me, that is already a red flag that you cannot pay down these loans. So if you are, I would say, I'm gonna be even more like conservative or more strict. So if you're over 40% of your utilization, I wouldn't even I wouldn't even do it. Just because then you're gonna risk getting a credit inquiry when knowing you weren't gonna go ahead and get approved. So I do have some issues with that advice. Um, him giving that. So it's like, yeah, I'm gonna right before we get back into the video, I'm gonna show you how to go into Experian and find your credit utilization. If you already know it, then it's you know that is that. So let's see. Okay, so this is a client that I'm helping. Let me show you their credit utilization. All right. So here you go. Right now he's at 59%. That is an issue for me. So if you would apply then I wouldn't go ahead and give him more credit because he's already having a tough time just alone approving it. So essentially, where you want to go, because let me see, because I don't know if I'm gonna be able to show you, because also I don't want to show the person's name. Yeah, I can't show you, but essentially, if you just go to once you log in through Experian.com and then you click on, you're gonna look at the top, you're gonna see it says credit. You're gonna click on credit, and then um, actually no, it's actually just gonna be at your homepage. So I don't know why I'm making this more complicated. So essentially, once you log in, you're gonna see your credit score, whatever number it is, and then below that, you'll see that it says, actually no, I can actually just do this. I lied. I'm a liar. Okay, here it is. So once you log in, it'll take you directly to this page, and then you'll see your credit score, and then you'll see your credit utilization. So what you got to do is you got to start working towards that. And if you really want to get approved for more debt, you have to at least bring this to 30% or less. The less you have, the better. So that's what I wanted to explain here about that credit utilization, how he was half right. So to summarize it, um, you got to pay down your credit utilization and your other loans you owe, because again, that's what counts for your second biggest factor on Experian for your credit report, and get on a budget so then you can get that done and try to pay it off in 30 days to get an 800 credit score. But let's go ahead and hop back into this video.
At least in the short term. Every time you do a hard credit pull, your FICO score is going to decrease by a little bit. Why? Because when you open a new line of credit, they're going to do a hard inquiry on your credit. And this is going to show up in your credit report. It's going to stay on your credit report for maybe 2 years, and it's going to decrease your score by, say, 5 to 20 points for at least a few months. Now, that seems super annoying, and it is, but why does that actually decrease your score? Too many pulls shows them that you might just be applying for too many lines of credit that you might not be able to afford. Simply put, it's just associated with more risky behavior. So what you want to do is you want to keep your pulls to a minimum. Only apply for the things that you really need. Now you have to remember that this only affects your credit score in the short term. And actually in the long term, opening up more accounts could really help you if you pay off those accounts on time. This is what I do with credit cards. Like, you guys, I have at least 8 credit cards right now, and I do have a very high credit score. Now, one thing you guys have to keep in mind is, let's say for example, you are trying to get a mortgage and you are shopping around for different quotes. All these inquiries are about the same thing, a mortgage. So they're not going to actually count them as separate inquiries. As long as you do them between a 14 to 45 day period, all these inquiries are going to count as one. So if you're shopping for deals, if you're shopping for rates, make sure to do them all together at the same time. Now, moving on, if you're planning on applying for a mortgage or a car loan where you really want the lowest interest rate possible, it'll probably make sense to not apply for any credit cards in the months leading up to it. Because when you apply for those credit cards, it's going to take a short-term hit on your credit score. And therefore, when you're applying for, let's say, the mortgage, you might not get the best rate you could. So yeah, just keep in mind that the number of times you actually apply for credit is going to actually affect your score in the short term. Number 5 is something that a lot of people actually don't know about, and this is Experian Boost. Basically, Experian Boost helps you build your credit based on your past utility and phone payments. Generally, these credit bureaus, they don't care if you made these phone or utility payments on time. Like, that really doesn't affect your score right now. But Experian has this free program that actually allows you to connect a bank account, and they're going to scan that bank account and see if you have made these payments on time. And when they find these on-time utility and phone payments, they're actually going to use that to help calculate your score, and your score is going to go up. They claim that the average boost in credit score is 13 points. And guys, this is very fast. It's very easy to do. So I definitely recommend you guys all do this. Note that when you're applying for credit, these lenders, they don't only look at your Experian score. They're also looking at your TransUnion and Equifax scores. So by doing Experian Boost, you're only boosting your Experian score. But overall, it can still help you a lot, because most lenders, they're going to take your middle score of the 3 as the score that they use to determine what interest rate you get. So if that happens to be the Experian score that is boosted by X amount of points, then that's really going to help you out. And this is not sponsored by them in any way. I just think this is a really cool service that not too many people know about, and that's why you guys should try doing this right now. Okay, the number 6 tip for getting an 8.
Oh my god, if you guys have been watching my channel, you know how I feel about Experian Boost. Not sponsored either. So Experience boost, wasted time. Do not get it. Like, why would you want to give a company that has enough information on you access to more information about you? Enough about that. Um, enough about that rant. And again, for measly 13 points just to hand over. Okay, the Experian boost is exactly like a credit authorizer. Like, we don't care as underwriter, and neither does the credit algorithm. Because again, if that was the case, Experian would make a Experian boost worth more to your credit score. What they really care about is your payment history and the amount you owe. So only because you're paying your utilities, your phone bill, your internet bill on time, that's not going to get you to an 800 credit score. Like, it's just not. So for him to say this, to go ahead and get experience boost, it was a waste. It was definitely a waste of advice, and I definitely I wouldn't I wouldn't get it because again, at least looking at it from an underwriter's perspective, when we see that stuff on your credit report, we don't care. Like, okay, great, he's paying, he's paying his phone bill, which you're going to pay. Like when we're looking at someone's application, especially when we're looking at their credit for like an auto loan or a mortgage, like the last thing that's in our mind is, are they paying their phone bill? That's not gonna be a way in to make or break a deal because you repaid it. So because we don't care about those utilities or the Experian boost, like we're not gonna hold you accountable to that. So yeah, so that's a little insight for you guys. I threw a little gem for you guys, something you guys don't know. But yeah, let's go ahead and hop into this next video, or to the next part of the video.
800 credit score is to set up auto pay on all of your accounts. This is the most important point in this whole video. As soon as you open an account with a credit card, a car loan, whatever it is, make sure you set up auto pay right away. This is crucial because it's going to make sure that you never miss a payment ever. So to do this, you'll log into your account, and it's going to be different for every single company, but you're going to find where you can set up auto pay, and you're going to connect your credit card or your bank account with your routing and account numbers. Do this for your rent, do this for your car loan, and especially do this for your credit cards. This is where most people mess up. They just simply forget to make a credit card payment. And I totally get this, like, it's very easy to miss a payment on a credit card. And I know a lot of people that unfortunately have quite low credit scores just because they forgot to make a payment on a credit card, and that severely hurt their score. Literally, an 800 credit score is only attainable if you don't have any missed payments in the last few years. Like one single missed payment that you can't dispute, and your credit score is not going to become an 800, at least not for a while. This is the single most important thing that you guys need to start doing today to drastically improve your credit score. You want your on-time payment streak to be as long as possible. If you think about what your credit score is, it's just basically the credit bureaus trying to determine whether or not you will make your payments on time. An 800 score tells people that you are going to make your payments 100% of the time, and that is why this is just so important. So yeah, that is it, you guys. So if you
I think he could have framed that better. So, auto pay is not the most important thing. Your payment history is the most important thing. Having auto pay will definitely increase the chances of you always having, for you to be making your payments. But always keep in mind, if you decide not to have auto pay, it takes about 30 days before it gets reported. So if you think you may have missed it and you receive like a letter or a phone call, normally you get a phone call or a letter through the mail before it goes 30 days past due. Because again, the bank, the financial institution just wants their money. So it's like, this score is a little, or this advice is a little shaky. So it's like, it's not like the most important. By doing it, it'll be like a credit, it'll be like an authorized user. It'll just help you a lot more if you do auto pay. So definitely not bad advice. Um, the key takeaway from this is, if you really want to get to a 800 credit score, is always pay your bills on time. Actually, before I get to that, it is actually attainable to get your to get 800 credit score. If you have a missed payment, it's going to be that same video about credit habits. There was this person that went ahead and missed his payment and was able to still obtain a credit bureau. So after this video, it'll be somewhere up here. So watch it after this. So yeah, so the key takeaways of this video is just pretty much payment history on time, pay down your debts. That includes your installment loans, like unsecured loans or personal loans, or signature loans is the terms people know. If you have an auto or a motorcycle or a boat, your mortgage is obviously having a house loan is a little bit more harder to pay down versus an auto. So paying that down, making sure that you get to like a 10% credit utilization and below will optimize to help you get to that 800 credit score. Um, Patience. I know this doesn't really do much, but in the long term it will. Like, it's not, this is not something that you can just get in 30 days. I promise you this. You can't get a credit score in 800 credit score in 30 days. It takes so much time to go ahead and get there. So definitely having the patience to just let you know this is a marathon, not a sprint. So those are the key takeaways from this video. So let's go ahead.